'Twas the night before NVDA earnings, and all through the house, not a trader was stirring. I want to ask you, we're supposed to have NVIDIA tonight. NVIDIA's earnings are after hours. And so this is a tricky earnings because everyone expects movement, but they also have dropped quite a bit in the last 2 weeks going into the earnings, as has the market. Tomorrow morning, I think, is it tomorrow or Friday we're getting job reports?
Tomorrow, I think.
Okay. So the market's going to move. So Dan, I wanted to think through a couple minutes. If I was a trader and I came to you and I said, Dan, I have to put a trade on, buy close today. I got to spend this money.
Yeah.
I want to look through real quick, if it's okay, what some options would be for that.
We're saying NVIDIA could affect the market. Something like a vertical debit spread. You can start out there. So if we're at, I'm not sure what the expected move here, Troy. Does anybody know what the expected move?
I think it's $13.
13. So one thing you go, okay, in the world of earnings, okay, let's say it's plus or minus $13. You can start out. Do you think it's going to move more or less than 13? If you think it's going to move less, right, then you can start in with some type of butterfly calendar, iron condor, range bound thing, right? Because you're looking, I think it's going to move less than expected. But if you're looking for a shooting bear, as you said, if you're going for a move down, maybe you do a spec trade, place your short strike, maybe at 13. Let's just say, first of all, you get your which way, right? You could say, like you mentioned, NVIDIA's been down a bit, right? It's been up a lot over a year or two, but lately it's been down a bit. So if you're on the bullish camp, you do a cheap vertical, maybe place your short at, what would you say, Troy? 195, 200?
Yeah. Let's start with 195.
Yeah, 195. And then
Dan, I'm presuming 2 days out. I'm presuming this.
Yeah, because I don't think they have. Yeah, that's all they have is the Friday expiration.
Till next Friday, yeah.
Yeah, and then what if you buy let's just keep it cheap, buy the 192s. So there you have what's the cost of that? When you think about it, for a small account, $60. Now it doesn't turn into a disaster, right? $60. But the thing is, you've got some delta, but you got a chance here, right? If we're near the short strike or higher, you got a chance to make 100, 200%, right? So it's a cheap shot. Now, if you said, okay, Dan, I'm willing to lose $200, right? I'm willing to lose 200. You could do 3, right? You could do 3 contracts depending, but that's a starting point, Troy. That's a starting point. And it's a vertical. So you have a little bit of long delta there. I think the delta on 3 would be 15 deltas long. And that's great, right? That's an idea. Now, if you want one other idea, and so any comments on that or on the looking at the range end, it's not gonna, the person knows coming in as a spec trade, they know the most they could lose is the debit. They see the potential, so it's got good potential. And you could do that on the upside or downside, right?
That's exactly right. And for those who are new to options, this is the power of options. Is this type of trade, let's go back to one real quick. What you're doing basically is it's the equivalent of buying, what you're starting out with is 5 deltas, but it's something that will change over time. So you're buying deltas basically for cheaper than you could if you were just buying stock.
Absolutely.
And that's the power of options, is you can place trades that will equivalently be the same as if you're buying stock at a certain point for cheaper, because it's a leveraged product. And Dan, it's one of those things where I overthink things all the time. And this is a good reminder of sometimes just buy a vertical.
And like here, okay, it's a 2.5 wide trade, 2.5 wide, you pay 60. If we're 192.5 or over at expiration, that trade goes to $2 on Friday, and you paid 60. And that's one idea for a cheap shot, right? In terms of dollar wise. Another one, Troy, if we could put similar, let's just say we're pegging the 195 strike, but you can basically the same doing a butterfly at the short strike and many different butterflies, but I'm just looking for the cheapest versions of ones. You place the short at, what do we say, 195, Troy, or 190? 190?
Chat, which one did we do? That's a great question. We put
195, I think.
Oh, yeah, I think it's 195.
So if you sell two at 195, and let's just similar, go buy, let's just do a butterfly, buy one 190. So this would be a balanced butterfly, and then buy one at 200. This is, you're paying $44, but it's like Evel Knievel going over the Grand Canyon.
That's exactly right.
Again, for $44 is your risk if you do one. If Evel gets in that range, show him if the landing, and I kind of look at that green areas of the landing strip. If the plane lands, especially on Friday, in that area, I mean, you can, from a yield wise,
Can do some damage yield wise.
do some damage. But it's the pickle about the vertical spread. What's nice is your long deltas, you're starting out long deltas, you're going to make something as it goes up, right? You're going to get something. Here, it's a little more finicky, meaning if you go back to the beginning, Troy, bring the date back to the beginning. I just meant on the graph today. Yeah. What's the deltas? Your deltas are 2, right?
Yeah, negligible. Two,
Yeah, negligible deltas. So this is more the real home run is if we can be in the landing strip of the airport there in that green area as you get into Friday, then this is going to be, see, here's the thing. This will be a better yield than the vertical spread, but this can be, it's really for towards the end.
Yep.
And that's why it's very cheap, but it's toward the end. And then anything else you want to add on the graph here? And the other thing here is because obviously the green is showing on Friday, all the volatility will be out of it. So the graph will look like.
Oh, yeah. By Friday.
Yeah.
This
graph is accurate. The expiration graph.
Yeah.
It's like being in I remember going Irish saloon and playing darts. You got to there's some accuracy there, right?
Yeah. Yeah.
So this would be a directional butterfly. And then, but the other way could be, we can give one last one, Troy, if it's okay. If we go big.
Yeah.
Vertical's fine. The diagonal, you could do some type of a broken wing, right? Like how would you set up, Troy, maybe a broken wing? I know you like those sometimes.
Yeah. For me, I think that the problem I would have with it, so there's two different types of broken wing, obviously. You could do something where it's like cheaper, but you have more risk to the upside.
Yeah.
I wouldn't do that because we're so depressed in this stock right now compared to what we've been on, that if it's good, really good news, let's say they did make $1 trillion, the thing's going to pop quite a bit. So if you're going to do a broken wing, I like big fat, like Dan does, real big fat numbers that are just sticking points. And so I look at this and I think if we really were going to pop, I think 200 would be where we're going.
Yeah.
And so you could do something like this, and that's going to be more expensive, but it's going to, if you blow past that, you're still going to get paid.
And that's the beauty of this trade. You're more than willing. This costs your margin.
This is more expensive. This is a more expensive trade for sure.
Yeah. It's not I mean, it's $165. Am I right? The max loss. So that would be your margin on this. But that's if you pick the right direction, at least you're going to get paid. It's not like a balanced butterfly that if you go too far past it.
Yeah.
To be right with the direction, but not get paid is bad. Here, it guarantees you have your risk on the downside a bit, but I like this. You have a maximum risk on the downside of 165, and then but it's opened on the upside. So this would be like a 10-5.
Yeah. Sorry. I was playing around there for
you had it there. Yeah. I think that's Yeah.
You could also get cheaper, but it would require more movement. And that's just what I meant for the risk. You don't want to play that game with risk, because let's say we do blow through it, or maybe you do want to play that game with risk, but it's not something that I would necessarily want to play with NVIDIA at this point.
And try make it even for a small, again, sticking with the theme of a small account. What if you did the 195, 200, 202? A mini version of what you suggest. Same thing, right?
Yeah, exactly. That's right. That's even better.
Here somebody's risking, and it's, I think it's a great, here someone's risking $57.
No, that's
participate and learn with NVIDIA, NVIDIA. Yeah.
I think that's great. Like, those type of structures are perfect for earnings in my mind. Take cheap shots.
Right.
And that's
cheap. Yeah. Now the other, just to include maybe another different type of thought.
Yeah.
With earnings, I agree. The cheap shots are the best, but let's go back to the drawing board and do one last one and do, I'll call this maybe, can we seek to get close to 2 times the expected move and do an iron condor? So let's say we look at do a 10 delta iron condor, let's say 5 wide, keep it small. So 10 delta on both sides. So let's just take a look at this. What's the short strike on the upside? It gives us 2075.
207.
Oh yeah, 2075. And where are we at now? What does this give us? How many?
We're at 184. So
All right,
that's
16. So this gives us 23 points. Not exactly, but close to 2 times the expected move, right?
Yeah.
And then on the downside, it gives us 162.5. That's about $22. So, you're talking like 1.8 times the expected move or something like that. So if you thought, hey, that's enough room. Now, I don't know if I would make that bet because, who the heck knows with this one. But generally, these can work pretty well in something like a Microsoft or some of these stocks. But what's the credit on this?
75.
Now, this doesn't, after what we just looked at with potential 100% returns, this is pretty boring. But again, you can just put it in perspective, potential $75 on $425 of risk, almost 20%. That's not chopped liver, right?
It's not chopped liver at all. And just to kind of get nuts a little bit,
Yeah.
You could also do the thing where you add a butterfly to that.
Yeah.
And
I like this.
And so you're going to get, you're basically trying to put that lottery ticket in there.
Yeah.
And so you got a lottery ticket to the upside, but you're still you're going to maybe make some shekels. Yes. If it doesn't do anything.
Yeah. If it doesn't do anything.
Yeah, absolutely. Well, Dan, that was informative for me, and I've got to go look at some NVIDIA charts now for the, but listen, you guys be safe out there. It'll be a fun day tomorrow morning. So see you soon.